Okay.
It started, I think.
Yes, yeah.
Let's wait for 5 minutes for probably the audience to build up and see.
I think it is connecting. Warm greetings, everybody. We will start in 2 minutes from now. A very, very warm greetings to everybody, my dearest insurance professionals and industry colleagues. Thanks for joining our webinar. This is our own webinar, and because we are joining from different geographies of the planet, so definitely somebody will be having good morning and somebody will be having late afternoons. So let's commence the webinar. Let's Bismillah and Namaste to all. I just wanted to explain the webinar format. The format has been designed with, we have 3 panelists with us. So each panelist will be having 20 minutes of their time to present their paper. and then we have a quick 5 minutes question and answer for that particular panelist. Thereafter, we will open the forum to all our participants for question and answers. This is a very interesting webinar, and we already have a very good participation currently. We are live on Zoom, LinkedIn, Facebook, and YouTube. Welcome all again. In fact, to be very frank, I always use this adage: the future has arrived early. The new normal of insurance industry has started. If you see how the market was evolving, InsurTech was slowly coming into the picture. There were a lot of traction in the market, and things were developing slowly. But thanks to COVID, I think every issue has some silver lining to it. COVID speeded up the technology revolution. Today we have excellent InsurTech platforms which are in use and which are serving our general public. So I will start with the opening note by our chairman, Mohammad Hisham. Hisham, please.
Thank you very much, everyone. Just to introduce myself, my name is Mohammad Hisham, and I am basically chairman at the Regional Committee North of Insurance Association of Pakistan, and chairman at Lahore Insurance Institute right now. And professionally, I'm working with IGI Insurance as regional head, and working with IGI from last 20 years, and I've worked in various capacities. And it's a pleasure to have you all. So I would like to formally welcome everyone on this webinar on digital transformation in insurance industry, which is being jointly organized by the Regional Committee of North of Insurance Association of Pakistan, Lahore Insurance Institute, which is a part of Pakistan Insurance Institute, and IGIP, which is a group of insurance professionals hailing from about 28 different countries across the globe, and was an initiative of Mr. Zulfikar Ali Khan. Since last year, IGIP has collaborated with Insurance Association of Pakistan and LII to bring webinars for insurance professionals across the globe. And this is the fifth webinar of the series that we started last year. And mainly after the COVID pandemic set in, I think the boundaries became very limited, and this gave us a new avenue. Now, we intend to create synergies with insurance professionals across globe and make IGIP into a vibrant platform which can not only help young professionals learn more about the opportunities in insurance professionals, but also help them in getting various qualifications. I would also like to specially thank the panelists, especially Mr. Zulfikar Ali Khan, who is the founder of IGIP, and our esteemed panelists, Ms. Alan George from USA, Mr. Awais Farooq from USA, and Mr. Chalapati, who is acting as a moderator today. I would also like to specially thank Ozone Digital and CXO Forum for sponsoring today's event and increasing our outreach respectively. So I would like to thank Chalapati once again for volunteering as a moderator and taking this webinar as a host. So thank you everyone, and welcome to the webinar, and hope we have an exciting learning session today. Thank you.
Thank you, Hisham. Thanks for the good word for me. Thank you. In fact, we see the participants' numbers are growing, and this shows the seriousness of what exactly we are into. Frankly, if you see, the whole world is talking about technology and digitalization. And what is so new about this particular session? We have done a little bit of brainstorming on this, and because we are talking about new geographies, because we are talking more about those economies which are just now picking up on technology. The more we talk about technology, the more we talk about transformation, the more we talk about insurance as a subject which has to be bought by everybody. This makes a big difference to the general public. The whole idea of this particular session is to equip our professionals and our colleagues to go in for more digitalization, because this is the only way we can reach the masses. I take this opportunity to welcome Zulfikar. Just let me give a brief introduction of Zulfikar. Zulfikar is a very well-known personality in the market. And especially he is a founder of IGIP, International Group of Insurance Professionals, which has grown by size and reach. Today we have members from throughout the world, like we have major interaction on technical matters. There's a lot of discussion which we do quite regularly. Along with that, Zulfikar is highly qualified. I just now mentioned, I envy Zulfikar, why you are so highly qualified. It puts us in shame. In fact, the serious note is that this encourages members to go for higher qualification. Qualification matters, and this is what Zulfikar has shown it to us. Zulfikar currently is with EFU, and I invite Zulfikar to make the keynote. Thank you.
Thank you, Chalapati, for your kind words, and Hisham Saab. IGIP was created as a platform for educated and experienced insurance professionals from world over in 2015. Now we are about 224 or 5 members on WhatsApp from all around the world. We hold webinars on regular basis, and these webinars usually pushed and done by the volunteers, and I thank them all on behalf of IGIP group members. At this WhatsApp group, we have educational discussions, and it is a great place to network with people from various regions and areas. Many thanks to Hisham Saab on behalf of all the members of IGIP for his support in all the educational and developmental activities we are doing in IGIP. He always works as an engine to motivate and do things which we cannot perform in his absence, as he inspires us and pushes us forward. We are joining hands with Lahore Insurance Institute Insurance Association of Pakistan Regional Committee North, where he is chairman, and he helps us a lot. We are very much thankful to Ms. Ellen George for her untiring support and motivation, the positivity and meaningfulness she has given to our group by continuously creating opportunities for webinars. Further, I need to thank all other panelists, that is Mr. Noman Bashir, Mr. Awais Farouk, and Ms. Ellen George. All of these 3 panelists have vast experience in their field and have good command on the topic they are going to present today. We are very much obliged to our sponsor for today's show, Messrs. Ozone Digital, which is headed by Mr. Noman Bashir, one of the panelists today. Ozone is a true to the core insurtech startup company. Ozone believes in developing alternative distribution opportunities through B2B and B2B2C relationships. Mr. Chalapati is our moderator. He always helps us, guide us, and willing to positively contribute in the greater cause of knowledge, education, and continuous ethical development. We thank him on behalf of all the members. At the end, we cannot do such show without back-end contribution of Mr. Usman Khalil, Mr. Zohaib Kirmani, and Mr. Timur Goyal. We thank them all. That's all from my side. I guess we should start with the presentation now. Over to Chalapati.
Chalapati, you're on mute.
Yeah, no, I said, let me do a little bit of self-praise. When I'm a fellow in insurance, and I currently work with GDV International Insurance Brokers in Dubai. I handle the reinsurance and insurtech and product development. This is my forte. And I'm very happy to be associated with IGIP, and personally very happy to be a brother for Zulfikar and Isham Saab. Just before we start our key panelist address, I just wanted to say how the industry is moving towards digitalization. The whole concept of insurtech should be to reach the masses. This is one very important field which we are talking about. We are talking about deep penetration into remote corners of the world, a sort of a last minute initiative. This is very important because the city people definitely have a easy access to technology and easy access to insurance. What we are talking about is reaching the people who have not experienced insurance till date. We are talking about micro insurance and to uplift the real needy of insurance, its benefits. Very important. Today, the corporate world is almost insured. Every corporate won't afford to run this business without insurance. But the individuals are still not covered. We are talking about 3 to 4% of the world population having a life insurance cover or having the right type of motor insurance cover and things like that. This initiative, the technology initiative which we are taking about, this will help the last mile guys to reach insurance products. We are also talking about law of large numbers. We are trying to create a new customer base and expand the existing base. Thereby, we bring price advantage to our buyers. We are trying to simplify our products, reduce red tape. The insurance wordings have simplified, in fact, a lot. People understand insurance better. They know how to make a right claim. And we are really seeing the real delivery of benefits now. More insurtech startups means more innovation. When I have a little bit of time in the end of the panelist session, I would present a few case studies there. And one good advice which I would like to say is profiteering should not be the only factor for insurtechs. We should also aim at doing larger benefit to the larger society. So I start with the first panelist. Let me welcome Ellen George. Ellen George has been associated with IGIP since beginning, and in fact, she has supported us in many seminars before as well. She is supporting a global insurer in US, and she manages Internet of Things, and she is overseeing all aspects of IoT from sales to billing. She has a credible 15 years of underwriting experience, and she is also a volunteer leader for CPCU Society. Let me again invite and welcome Ellen. Ellen George, please.
Thank you, Chalapathy. Good morning, everyone. Good evening or good day. Thank you for joining us today. I am going to share my screen now. Can you see it all? Can you see it?
Yeah, we do.
Whew, perfect. All right. Thanks again. I am going to be talking today about IoT, the Internet of Things. The actual title is also something that people are not sure if they want to call it IoT. There are different names for it, but I'm sticking to IoT for today. There are several names floating out on the internet. What is the Internet of Things? To break it down in very simple terms, think of all the little devices that you have that's connected to the internet, and it's sharing the information with your the manufacturers are talking to each other. You might not even know it's doing that, but as long as you have a little device that is connected to the internet, it's considered the Internet of Things. And how is this going to change insurance? If you think about your device, big or small, sharing information back with the manufacturer or sharing information with each other. For example, your washing machine talking to your neighbor's washing machine, and your insurance company can capture all that information. What does that mean? I don't know if we figured it all out, but today I'm going to try to at least attempt to give you just I'm going to skim the surface of what the Internet of Things means. So according to the World Economic Forum, it describes a growing network of internet-enabled devices. It's going to enable us to have smart cities in the future and driverless cars. Some countries would argue that they already have some smart cities. It's described as the fourth industrial revolution. And the World Economic Forum is estimating that by 2025, that we'll have about 42 billion devices capturing data. I believe the insurance company has always been into big data, always been into technology. It's probably one of the reasons why we sometimes struggle to catch up with the new technology, because you can't just disregard your old one. But this is definitely a game changer. No one has ever seen this much information. They don't know how to capture it. They don't know how to use it. That's all the fun with the fourth revolution. So just a little bit of background on the history of the Internet of Things. It was coined in 1999. And again, as I mentioned earlier, the title might change soon, who knows? It was invented by a gentleman called Kevin Ashton. And he, in 1999, believe it or not, the internet was a new thing. And he was doing a presentation at his employer, Procter & Gamble. And he said, oh, well, what am I going to call the presentation? And it's about things and it's about the internet. So the Internet of Things was born. It accelerated in 2010 because Gartner listed it as an emerging technology. And around 2014, the devices started getting cheaper, mass manufactured. So it became more prevalent and the people can afford it. And since then, it's taken off. The devices are still getting cheaper. One of the earliest example of the Internet of Things is in the 1980s at Carnegie Mellon. Some professors and students were too lazy to go to the vending machine. So they decided they're going to hook up a computer program to see if there was even Coke there and if it was cold. So that's what they did, but it was bulky and progress was limited. But that was the birth of the Internet of Things, where you're connecting the internet to a device and trying to get information back from it. There are three domains in the Internet of Things: wearables, enterprise, which would be more the commercial space, and then the public spaces. So what exactly does this mean for insurance? On the wearable side, you would see more in the workers' comp. For us, it would mean would affect more workers' comp. It could affect also GL. Smart factories and precision manufacturing is an example of enterprise IoT, which would be in the commercial space. And then you have public spaces that uses it for waste management, smart electric meters, which has been in the US for some time, and traffic lights. Those are just examples of where it's being used in the public spaces. One of the things when I first joined the IoT division, I kept hearing about the IoT stack. So I thought I would just include a very brief explanation here. The stack has to do with the devices, the software, how the devices talk to each other, the platform where data is stored, and then the cloud application that actually, and again, that's a software too, that actually sends the information back to the user. So we've got the device, which could be, in my example, I'll just use a water sensor that would detect water. It has software there that's talking to the manufacturer. It has a way it communicates. It can communicate using Wi-Fi, cellular. It has to send information to the manufacturer, talk to another sensor. So that's where you would call the communication part of the stack. And then you've got a platform. Where are we storing this information? An example would be AWS, IBM Watson. And then how you, the end user, getting this information. Most of the times for us, it's an app. Some recent examples of insurance using IoT is in 2017, the Lloyd's Lab introduced Parcel. They're using IoT devices in their cargo to track the cargo and then pay claims as they come up. Then we have Flash Flood using it for flood insurance based on what I read online. They give you a sensor to put in your home. Soon as it detects there's a flood, depending on the coverage wording of your policy, you get paid. There's also water sensors that are being used in the industry, temperature sensors, vibration. There are numerous examples of sensors, and I think personally that this is just going to continue to grow. As you know, insurance, we look at a peril-based coverage, right? We're looking at, is it fire, is it water, products, GL, property. So there are different reasons why you could be looking at sensors, but it always come back to a peril. What peril are you either reducing a loss or trying to prevent a loss? So one of the a few challenges is who is going to pay? A lot of times you find that insurance companies want to use these devices, but the buyer, the insurance buying public is saying, wait a minute, who's going to pay for it? You want me to buy a sensor, use it, and then you take the information to reduce your losses? How am I gonna benefit, right? So it always comes back down to me, to the money. Who is going to be buying these devices and giving it to the insured? And one of the concerns too with these devices that they can give false alarms, or what we perceive as false alarms. In reading about the BPO spill, there was a sensor on that grid that exploded. It had just been silent because it had given warnings before. So they silenced it, and the night of the explosion, even though the sensor could have given them warning it was about to explode, it didn't. So there's always that cry wolf effect of, not paying attention to the alerts you're getting from these sensors. And depending on where you are, you always have to deal with regulations. Here in the US, we have issues such as discrimination, rebating to deal with. And what does discrimination mean in the US? It just means that you have to be consistent in how you're offering these devices to your customers. You can't, for example, use premium to say, okay, this person's or this company's paying me $1 million, I'm going to give them a IoT device. You don't want to do that. That could be considered discrimination. You want to be consistent about who you're giving these devices to. It has to be fair based on the rules. And each state in the US has different rules. Then there's also this concept of rebating. You can't be giving your customers free things just so that they can buy insurance with you. So that's something also that in the US, the NAIC has recently tackled, and it's a changing environment from a regulation standpoint. As the regulations change, I think you're going to see more adoption of IoT devices. And this one, I think everyone knows about, the security and the privacy issues. We've read about a few recent hacks with IoT devices. And of course, we're all worried, or maybe some of us has just given up about the privacy issue. Like who has all this information on us and what are they using it for? And then the boring part is the data management and the ownership. You get a lot of data with IoT devices. How do you manage it? How do you analyze it? What format do you get it in? How do you even collect it? Is our big challenges being faced by anyone in the IoT device space. And then of course, there's always who owns the data. If you look at your contract, you might get an idea if you own your data or if the manufacturer owns it, but that's debatable on ownership. And I included here just a few examples of lawsuits that I have seen. Amazon Ring faces a $5 million proposed class action lawsuit for their camera being vulnerable to cyber attacks. It's a good reminder that as we solve one problem, we create another, but that's also an opportunity for the insurance industry. So we could be preventing water losses or slip and fall accidents, but creating more of an industry for cyber insurance. Ring is facing a potential class action lawsuit for unfair protection fees. And one of the things with these devices is you would see they have a monitoring fee associated with them sometimes. And you have to be careful that you could be billed for $1, $2, $3 for monitoring fee for monitoring with these IoT devices. And then I included another example where recently, April 15, 2021, someone was mistaken for being a shoplifter by facial recognition technology. And he's suing the police. That's a very serious matter. Imagine you're just in a store and maybe you were not even there and you were being accused of a crime. I like to think with IoT, anything is possible. I've included here just a few examples of IoT around the world. This group, or the majority of people on this call, probably know this more than I do. But I read in the New York Times that Saudi Arabia is building out a city with flying cars, robot dinosaurs, and even artificial moon. So using IoT devices. China's also started in 2017, and this is based on what I read online. This is all actually in operation right now. You can take a driverless bus to an on-demand supermarket to enter it using facial recognition, and you pay without having to use cash. I don't know where the people are there where we're going to get money to do all this, but that's to be decided. And that's coming. Amazon has piloted a similar store in Seattle, so it's not just limited to China, it's around the world. India's also enabled 100 smart cities. They started in 2018. So I like to keep a global outlook on the world. So I would be interested to hear from anyone on this webinar what they are seeing in the world for IoT. If you have questions that I can't answer here, feel free to contact me at elaineverstaker@gmail.com. Thank you very much for listening to me.
Excellent presentation, Ellen. Thank you so much. It is a very interesting and a sort of a presentation with a global perspective. Thank you so much. Usman, do we have? We have 5 minutes in case any of the participants wants to raise a hand for a question. Fine. We still have a question and answer session in the end of the panel discussion. I move to Noman bin Bashir. Before I ask Noman to come on the panel, I just wanted to give a brief introduction. I hope I'm with the right screen.
No screen yet, Chalapati.
Fine. Noman is a very seasoned insurance professional with 20 years experience in the industry, and he has very key positions with AIG and IGI General and Life Insurance in Pakistan and the GCC markets. Noman, in fact, is one of our co-sponsors as well, and he is the co-founder of the leading OZNet digital, which has put a lot of efforts to address the digital needs in the industry. He is very passionate about digital transformation in the insurance industry and is currently working to build a digital enabled environment for stakeholders within the insurance industry. I invite Noman to please take over and present his paper. Thank you.
Thank you so much, Chalapati, and thank you so much, all of you, to have joined this session today. Just give me a minute as I just share my screen. Okay. All right, I hope you guys can see it.
Yeah, very much.
All right. What I'll just add a little bit to where Chalapati left. Having worked in the industry for around 20 years, we have, or personally myself, I've already seen the industry very closely on what are the kind of opportunities that exist and what are the kind of challenges that exist. And also what are the opportunities in terms of further growth that exist in the market, different markets. So what I plan to do today is kind of sort of go through some of the stuff that I've come across through my experience working here as well as working in the other markets. And the area that I'm focusing on today primarily is the digitization efforts that would be required to really develop the insurance industry in emerging or developing markets. So that's it's a huge task to really cover it within 20 minutes. I'll try to do that. But just to give you a very quick background, we're looking at about $6.3 trillion in 2019 as per Swiss Re in terms of global written premiums. Okay, there wasn't any real growth expected in 2021. Why? Because there were negative growth that was expected in 2020. However, there were positive growth expectation in the Asian market led by China. Okay. And the reason why this is important to share is that we are also part of that emerging, growing, developing market. And for us as well, there has been growth last year in terms of 2020, and we do expect to have a decent growth in our part of the world and in some of the markets that we are working in. Okay, just to give a background from an insurtech perspective, although it's not here on the slide, but there was around $8 billion invested on the insurtech relevant initiatives worldwide last year as of end of 2020. And from an opportunity standpoint, it's worthwhile to mention, as per one of the researches done by Simon Torrance, based out of UK, there is approximately a $3 trillion opportunity that actually sits within the insurance industry for alternative ways of distributing or a different way of distributing insurance. So, while the industry has had minimal kind of growth, the opportunities that exist with the alternative side is immense, and alternative is going to be driven by technology, and you cannot really expect to have the real impact with the traditional way of reaching out to the audience at large. Okay, so based on that, what I did was I just wanted to kind of reflect on some of the challenges that we all face. We're all facing these challenges within our market here, and we are also facing this in similar markets elsewhere within the region and around the world. So, if I look at it from insurance penetration perspective, the insurance penetration, is not that high for the developing markets. We're looking at roughly around 2.5%. When it comes to developing markets, and especially the younger joiners of that group, and hence primarily what it means is that there is tons of opportunity that exists out there. Okay, if I look at it from Pakistan's perspective, it's worthwhile to mention that we are sitting at less than 0.8% of the GDP penetration, whereas our next door neighbor India sits at around 3.5%. And it's also very important to understand that when I look at the GDPs of both the countries, Pakistan has approximately $1,200 GDP per capita, whereas India, 2,000 or in north of that. And considering that we are at least 3 times less penetrated in terms of penetration, even if I compare with the Indian market. And we've got examples in Sri Lanka and Bangladesh, which are also very higher in terms of insurance penetration for us. So, this actually doesn't show the problem that exists in the market. It actually shows the opportunity that exists. And, it's with the tools that you reach out to this particular market, primarily the lower income market, that you will be able to generate the volume going forward. There is absolute lack of consumer data. There is no centralized data repository. That, at least for this market, I would say very clearly, yet it's not there. And even in other developing markets, the consumer data, the absence or the credibility of the consumer data, again, lends an opportunity for the tech side to come in to build that, because eventually this is the data that's going to drive your decisions in the future. COVID-19 in 2020 actually gave us a big shock for a lot of industries. In fact, rather than going onto the other industries, I think for the insurance industry, it has actually fast-paced the development by at least 7 to 8 years, or some people say 5 to 8 years. Regardless, it's an overnight shift to a virtual world. And this overnight shift to a virtual world requires tools. We don't have those tools available in most of the developing markets, or they are in the growth phase in terms of being deployed. The absence of insurer value chain experience is very critical to sort of highlight. Okay, wherever you go in fact, globally, if you look at it from an insurance industry perspective, globally, the major focus on the tech platform or the insurtech side, or the tools that go with the technology, has been primarily on the distribution side. It's over 50%. Okay, and the rest of them are pockets of the value chain. And when you talk about the value chain, it's an end-to-end solution, and I'll share with you in the next slide. But it's important to understand that this value chain experience is driven by the insurtech, if you look at it in today's environment, and it can actually drive a lot of premium growth and retention, for that matter, in various markets. Globally, the insurance industry is kind of impacted, or it's holding those legacy core systems that don't have the capability or the opportunity to really reach out to other alternative distributions. And that's where those legacy core systems are a block to reach out. And this block is actually taken down by the insurtechs, because eventually what's happening is that this collaborative effort with the insurtech industry, or the industry and on the tech side, is building that opportunity to grow the volumes. Product development is also very standard, very traditional, and the brick and mortar scenario is not letting the industry reach out. It's not that the industry doesn't have any talent or doesn't have the underwriting capabilities or the knowledge, for that matter. It's more to do with not having the right tools. And I think the insurtech environment or the insurtech industry or the startups are actually providing that, collaborative effort, or providing that collaborative environment for the insurance industry. And I must say here, it's a collaboration with the insurtech industry. Okay, it's not that they are ever going to take over the insurance industry as per se, but that collaboration is required to fast-pace, the product development. Very quickly, low-income, non-business friendly models are available right now in most of these countries and most of the developing areas. And primarily, what does that mean is those business models that really work on the brick and mortar. So, if you want to talk to, a low-income market segment, there are limited options available. And in this part of the world as well, in Pakistan as well, there are a few who have taken, these initiatives on the micro insurance side, and they have done well. But there is a lot to be done. I mean, just a couple of products or 3 products will not really give us that scale. There is plenty of opportunity out there for the market to grow. I think that the last 2 aspects are very important. The leaders' engagement. Unless a company's leader, when it comes to the insurance companies, is fully engaged and fully committed and fully, sold, it'll be a difficult, way forward for the insurance industry. So the leaders' engagement is extremely important, and we've seen the leaders getting engaged over the last 1.5 years since COVID, or one year plus since COVID hit all of us. And I think this leaders' engagement needs to sort of grow further, and we need to get out of our comfort zones as well. And I think one of the most important, area is the cultural dilemma, and this is very much part and parcel of most of the insurance companies. And this is, you see a layer of budding youth that's trying to sort of break out of its, boundaries, and it's important to give that nurturing environment, and feed that talent that's in there within the industry. And believe me, there's tons of talent that sits out in the industry today. So some of these developing challenges or developing market challenges I wanted to share with you, because all these are directly linked with what are the opportunities that exist. So this is the value chain. We mostly see a lot of effort being done by the insurance companies on the sales and distribution side, and that's where, because that's what the reason why it's done is because that's where the premium comes in. Okay, and I think it's one of the one of the most important areas to look at, but not the only area to look at. And that's where my belief system comes in as well, that there is an opportunity window that exists for the complete value chain, not just the sales and distribution. Sales and distribution is a major portion of it, not everything. So when I look at it from the value chain perspective, you're looking at product development and pricing, sales and distribution, then the premium collection, servicing, and claims processing. This is a broad outline of value chain. You get deeper into it, there are many aspects to it. But I'll go one by one on the product, on each of these value chain elements. So for product development and pricing, the low-cost products are an opportunity for mass penetration. And believe me, the low-cost products require a tech tool to really reach out. For example, let's talk about personal accident cover for the farmers, for that matter. So unless and until you have a tool that reaches out to that market at large, whether it's through call center selling, whether it's through feature phone SMSs, whatever that may be, it requires a tool to really reach out to those market segments. Big data and analytics is extremely important for the insurance industry to decide what are the product development initiatives that they plan to take in the future. And most importantly, how would they underwrite the risk? How would they price the risk? Today, it's normally, if you look at it from the developing countries, and if I talk about Pakistan as well, it's primarily driven by what the market does. Try to follow that. Every insurance company tries to follow that, and that's a big opportunity that sits out there for the insurance industry to pick up stuff from. Predictive underwriting is triggered by those tools. Okay, when you have data, when you analyze it, you can do that. AI and ML are able to identify preferred risks in many lines of businesses. Okay, telematics, wearables, IoTs, UBI. Elaine just mentioned that. I think there's a world of opportunities that sit out there. And by the way, in this particular market as well, where we sit today, there are jabs at telematics and wearables, and they've done well so far. But the opportunity is too big, for a couple of initiatives to really reach out to. On-demand insurance again requires, from product development perspective, tools to reach out to the clients as and when they need the insurance. Okay, and sector-specific products like agri, like livestock, again, you need to reach out to that segment through certain tools. Some of the insurance companies have taken that initiative and they've done very well in that. In Pakistan, for example, I see a lot of efforts on the in India on the agri and livestock market size. I still remember it was around 2004 and 5 when I was at AIG. That's the time when they started to work on agri and livestock. So if you look at it from a market to market comparison, we got about 15, 16 years behind, or close to that. So sales and distribution perspective, I think there is tons of opportunity in terms of even expanding your sales efforts. We are currently, looking at what do you call it? The traditional way of selling, and I think from smartphone or digital tools perspective, you are able to reach out to the newer generation, which is driving a lot for the country like ours. Premium collection, the premium payment tools are extremely important. I think that triggers the interaction with the digital tools, the digital interaction with embedded digital payment gateways. A lot of insurance companies today don't even have payment gateways. They're all focused on cash, checks, and that's pretty much it. So it's an opportunity sitting out there, and I think it's the right time to get into it. Telco airtime, I think there is an opportunity that sits in these markets, and I think this is very important to really reach out. Premium collection is the key, so they provide that platform to do that. And similarly for mobile wallets and open banking perspective, that's important. Again, quickly going through policy servicing. Policy servicing, the digitalization of the policy servicing is missing from the value chain today. And similarly for the the renewals part of the servicing, they miss out on that opportunity as well. And lastly, from claims processing perspective, blockchain, real-time claim engagement, all of this requires tools. My last slide, very quickly, we ran another session recently, and I think from Pakistan's perspective, it's important to highlight what is really driving the space for expanding or increasing the size of the penetration of insurance within Pakistan. I think the regulatory initiatives on the digitalization are worth mentioning. They've done a lot. The population demographics with over 65% sitting under the age of 30 require the tools. Existing versus new products, I've already mentioned that. Alternative distributions, again, banca is something known to a lot of us, but there are tons of other opportunities, including oil marketing, including telco, including utility companies as well. The value chain I've already discussed, and the culture as well. There's one thing important to mention here is the traditional versus new distribution. I think for markets like ours, it's important to handhold the traditional distribution and take them along and provide the tools to them to really bring the numbers in. Reinsurance appetite drives a lot. And just quickly going into mandatory insurance. Once again, mandatory insurance as well is something that is required in terms of increasing the penetration for the country. And some of the tools like Open API from the banking perspective opens up the window of opportunity for the tools to really push insurance for the market or the masses at large. So I believe I may have run a few minutes above, but this is pretty much it. So if there are any questions, please let me know.
Thank you so much, Noman. In fact, it was a very, very interesting and mind concentrating thing. You have touched upon plenty of subjects and very, very practical. In fact, you have touched upon individual geographies as well as globally. One thing I think your slide was not moving, so I request all panelists to
Okay, sorry.
their presentations so that we can share it with our participants. This will be good for them also to run through about what presentations we have seen. One thing I wanted to add to you and Elaine was we have traditional insurers with a lot of experience who have come into the market and done it, but we have also seen there are a lot of newcomers who have come into the startup, those who are not associated with the insurance industry per se, but who have a lot of strength on data management, those who have a lot of strength on digging upon new ideas. So this is one commendable thing in our industry. I have a question for you, Noman. Do you have time to take the question?
Yes, please. Yes, please.
Yeah. Syed Tanveer Akhtar, he has asked a question. When you talk about platforms, are the platforms used for digitization? This is part one of the question. So should I take all the questions together or you want to go one by one?
Is it from the same person?
Yeah, the same person, yeah.
Okay.
So the second part of the question is, all systems do you think are fully integrated currently? The third is, what issues faced by you while implementing the same in the insurance companies?
Okay.
Thank
I'll
you,
go one by
Syed Tanveer.
Okay, thank you so much for the question. And I'm sorry, my apologies for the slide deck because I didn't see the messages popping in. So we'll share the slide
That's part of the
deck
excitement,
separately.
yeah.
So my apologies for that. Okay, so to address this, look, when it comes to platforms, digitization is, this is one of the things that we are trying to sort of, if I look at it from where I sit, we're trying to sort of inculcate within the insurance company. But whether digitalization is the only answer or the only thing that we're trying to achieve, no, absolutely not. It's a tool. And I think it's important to highlight that the bigger contribution to the industry is when you start sitting with the industry players and adding value. You look at their processes, you look at their value chain, and you identify areas where they probably didn't think before, or they collaborate with us and have a discussion where they want to even further expand that experience. So yes, digitalization from a platform perspective is an important area, and this is what the core is for discussion. But that's not really the end goal. Our goal is very, very similar, very, very specific. And I think I would go to what Chalapati started the conversation with, is profitability versus corporate social responsibility. And I think unless and until the tech players look beyond the profitability aspect, it will be very difficult to really add value, because unless you create the need in the market, you're not going to be able to sell anything. So for that, you need to educate. For that, you need to sit with your partners and find out the areas of efficiencies required. Integration, big challenge. Do we have a solution? Yes. Every one of us in the insurtech space within this particular market and elsewhere has a solution. It's for us to really look into it. And you can always take a hybrid approach where you go offline first, then you go online. And solutions are out there. So this is definitely something that one can look at. And I think what was the third aspect, if you could just remind me, it was to do with insurance something, yeah? Chalapati, I can't hear you, sorry.
So
yes.
The third question was that what issues were usually faced while implementing these integrations in insurance companies? Yeah.
Okay, so for us, if I look at it, from our experience, the issues that were there, obviously was to look into the legacy systems and see how we can actually integrate with them. And I think rather than issues, I think there was at least from where we were able to sort of add value. We had the opportunity to sit and have a conversation with the team and add value to each other. I think from challenges perspective, I think core is one big challenge. I still, yes, we have reached out to many other insurance companies, around the GCC as well. Culture is impacting to a certain extent, and the fact that there maybe the lack of investment appetite, that also affects as well in certain parts of the world. So I think generally speaking, from the Pakistani market, it has been a positive feedback so far.
Thank you, Noman. Thank you. And I have a few more questions, but I would think I'll take this at the end of the session. That will be more interactive because I can use all the strength and knowledge of the three panelists to go together on this. Let me introduce our third panelist. Our third panelist is Awais Farooq. He is the head of insurance practice in Active Ops, and he is responsible for innovative technology and management process automation. He has vast experience of 13 years in the insurance industry, and he has served with companies like State Farm, Chubb, Berkshire in US, and he holds master degree in insurance management from Boston. He is a very qualified person, CPCU, AIC, and LPCS, and very active person in the insurance community. He is also the founder and advisor of a local youth group. I request Awais to please take over the forum and address his presentation. Thank you.
Thank you, Jalapati. I'm just gonna go ahead and bring my screen up. And if my screen doesn't show up, please interrupt me. So
Yeah, please interrupt me. Yes.
Yeah. Perfect. All right, so today we're going to be talking about artificial intelligence, working with humans and robots. I've been in the insurance industry for 13 years, and as Noman and Elaine are talking about Internet of Things and the digitization of what's happening within our environment, we're seeing a huge challenge and shift of what people perceive as artificial intelligence, machine learning, deep learning. What does it all mean? And a lot of times we get scared and we think about the Terminator coming, and that's the future, but it's not that, but it's close to it, right? We have to learn and figure out how do we interact with the technology that we have at hand, as well as the human beings that are going to make that emotional connection with our customers, whether it's from a distribution side, it's from claims and or any other area, is how do we integrate both of them together to attain a higher level of efficiency, higher level of commitment to the policyholders, and so on and so forth. So just before we dive into it, just to give you a high overview of what AI and machine learning is, and my interaction with RPA technology has been with straight through processing and working with a variety of different IoT of things, similar to what Elaine was mentioning, the water sensors, the drone technology, and so on and so forth. So here's a little bit of a graphic that shows you where artificial intelligence is being deployed. And you can see it doesn't just impact our industry directly. And as Elaine mentioned, it's a very large area. So you have autonomous systems. So this is going to be your drones, any type of technology which is grabbing data and projecting a human capability and a human intelligence associated with it. Machine learning, deep learning, and we'll get into those two a little bit more. Neural networks, any pattern recognition, all of these things. So whether it is healthcare, whether it is property, casualty, variety of different spaces. And we talked about wearables a couple of times as well. And all that technology is giving you mass amount of data. And what do we do with that data? It has to be a methodical way of us ensuring that we're attaining the highest level of output of what we're collecting. So data in itself is great. And we always have this mindset that as long as we collect the data, we could do something with it later. And eventually nothing really happens because we don't have the capability to comprehend the amount of resources and the places where this data is coming from. So having a mechanism of utilization of a computer technology that allows you to digest that data and present back an output that is predictive, that is accurate, and that is based off of historical events, right? And giving you future evaluations of how you should modify and or adjust your environment to meet the changing demands. And everything that we do today is being tracked from, where we've been driven to, what we are purchasing, and eventually, if you notice, there's a lot of prediction on what are some of the things that you're going to like, right? For example, if you buy diapers from online, you're going to get a prediction that you're more likely to purchase a bottle of milk and or a different thing that's going to be associated to a child. And same thing is true when you're speaking about purchase of a vehicle. What are the things that come along with that vehicle? And so the technology is automatically delivering that to you. We've seen a lot of work in the chatbot area. One of the unique areas where I found AI to be quite interesting is the medical environment, surgery specifically, where there's AI involvement taking evaluations of based off of the surgeon, based off of the technology that they're using, based off of their prior histories of success and failures in surgeries. It's actually predicting how effective that individual would be. So you can imagine for the insurance industry what that means from malpractice standpoint. That's something very unique. And we talk about data, and we're talking about any type of virtual companions, virtual real-time translation. So a lot of this area is revolving around artificial intelligence, and it's really strictly focused on the basis of collecting data and utilizing that data. So now we'll look at two pieces. So you hear these terms quite often, machine learning versus artificial intelligence. So to break it down, this overview gives you a good depiction of what artificial intelligence is and what machine learning is. So AI is a human intelligence demonstrated by machine to perform simple to complex tasks. While on the other side, machine learning, it provides the capability to learn and understand without being explicitly programmed. So you don't necessarily need to have every single thing defined in machine learning. It's adapting to its environment. So a couple other similarities and or differences is that based on the characteristics of human intelligence, that's what AI is using. It's using the intellect that human beings have gathered over the course of our history and predicting and using that to base its decisions, very similar to human intelligence. And on the machine learning, it's more on the probability side. And I know for all of us insurance folks, we love the word probability. And that's where you see a lot of utilization happening in machine learning. And you see the labeling slightly different of, hey, we're using AI, but it's not really AI. So when you think about drone technology, right, there's an AI element to it where it's depicting a human behavior. For example, in the US, we get quite a bit of hailstorms. So the drone is able to pick out the depth of the hail impact on a shingle and to give you confidence level of what is it likely for that to be impacted as a result of hail and or a bird pooping on the roof, right? So it's two different areas, but it gives you very deep knowledge of how do you make a sound decision based off of what you know. So as we move forward, you'll see that artificial intelligence is not something new. And it's been around since 1950. It's just that the term has now come into play recently. In 1950, English mathematician Alan Turing published a paper entitled Computing, Machinery, and Intelligence. And this opened the door to the field that would later be called AI. This was years before the community adopted the term AI as coined by John McCarthy. So you can see that this concept existed way before than what we imagined, because it's just that in the last decade, you've heard this term very heavily utilized. So once again, it's any technique which enables computers to mimic human behaviors. And machine learning is the ability to learn on its own without explicitly being programmed. And then you have deep learning, which we haven't spoken about, but that's a subset of machine learning, which makes the computing of multi-layer neural networks more feasible. So what is the potential for machine learning in insurance value chain, right? So I've seen this comparison, and it was very accurate from perspective of where is machine learning extensively being utilized. So you look at new business underwriting is about 56%, claims at 40%, product development 36%. And on the life and annuity side, you see, once again, similar patterns of new business underwriting, but then it changes to customer experience and product development. And claims is pretty low. So if you look at on the P&C side, we're seeing a larger growth of the claims activity and the machine learning being utilized, but on the life side, it's slightly less. And the reason for that is probably the amount of information that we need to collect and the way it changes, and the length of the policies that are in play right now. So P&C policies are normally much shorter term versus life policies are much longer, right? So here is a brief overview from 2017 to 2024. And it's in US $1 million. You can see the spend across different regions into how the AI market has grown. Of course, you see North America has spent significant amount of investment into the AI world. You have Europe next, and then Asia Pacific, and then the rest of the world. So I think as Noman very diligently and eloquently quoted, that there's a lot of potential when it comes to digitization, when it comes to the technology enablement for the insurance industry, and just as a general rule of where these things are being deployed. And part of the challenge is, from a perspective of figuring out where do we deploy this and how effective is it? Just because you're deploying technology doesn't necessarily mean it's going to give you the output that you're looking for. And if we go back to the basics of, our insurance and what is insurance all about? Insurance is a social good and it's an economic necessity, but it's not trusted, right? And that's the challenge that we face when it comes to technology enablement. If you look at the definition of Urban Dictionary, you find that it's a promise to pay later. So it's a promise of trust, right? And deep connectivity with real-time data, cars, homes, and businesses is going to enable you to get that result and gain that trust back from customers. Why is it that a customer has to report a claim and have to wait for so many days for somebody to even make a phone call? And then when the phone call to the person that comes out and inspects the vehicle, it's already a week or 2 weeks time. And by the time you get a payment, it's a month's time. And with technology enablement, you can really shorten that process and gain that trust and gain this visualization of, that insurance is a promise. We're selling an empty box of promises. And when the claim happens, that's when it's defined. And having come from claims background, this is a huge area where I see as potential for insurance industry, initially on the front end from risk evaluation and underwriting areas. However, even on the claim side, there's an element of how do you gain that trust back to ensure that, one, you're giving the best outcome of the policy, two, that you're creating this environment within our industry that is giving you visualization of how do you take a promise and turn it into a reality. With that being said, the way traditionally insurance has been priced is based off of average models of where we think, for example, I'll take auto insurance, and where we drive, and where we live, what our social background is, what our educational background is. All those elements combined together give you a visualization of where we think on average your premium should be. Now, the future is slightly different. What this is going to look like, yes, we have user-based insurance and we have other elements of it, but it's even going to go a little bit deeper than that, right? So user-based insurance, instead of just quoting you based off of the mile, now it varies as you drive through different parts of the region. So if you're driving in New York City, it's a lot different than you're driving in, Pennsylvania, for example, and with the cows and horses. Same thing, if you're in a very heavy city in Karachi, like Lahore, but as you go through the villages, your risk exposure changes and as you move along. So it becomes a different challenge to seeing how do you take all that information and translate it regionally as well as the driver-based behaviors as well. So, I mean, there's a lot of regulations that are fighting against this, and I think rightfully so, because there's a lot of opportunity to exploit it, right? So it's a great area. I mean, we're seeing a lot of growth in computer vision, auto damage detection, with Tesla, for example. You know, we think a lot about Tesla being such a self-driving vehicle and it's providing us such good luxury, but Tesla on its own is collecting so much data that we can't even imagine based off of what vehicles are around it. So it's grabbing all the information, and it's a living, breathing data machine that is enabling Tesla to make better decisions through AI and through machine learning, and figuring out how do we adjust our behaviors of vehicles or different technologies to ensure that we are where we want to be. So from sensors to telematics, wearables, hazardous environments, any detections that happening there. So really taking that IoT concept to the next level and saying, now here's where we need to go. So what does this mean when it comes to us working with the technology, right? It's very easy to be able to talk about the technology, but not recognize how we're going to use that technology. In normal situations, you know, you take a look at it. My biggest focus at ActiveOps is really helping organizations digitize the operations excellence by ensuring that you have the right people in front of the right work. So with this work and robots, a lot of companies have just transitioned into this mindset that just because we have robots, we don't need people. And I think it's the other way around. Because you have robots, you need different type of people, different type of skill set. And how do you manage between the two? You know, the productivity of a human being is slightly different and drastically different to what another employee can provide. But even further, when you think about the robots and what capabilities they have. So it's the concept of now we need to automate our workforce to work with these robots, whether it's RPA processing, internal processes, to shorten that time. You know, before an accident happens, you as the insurance company should be calling the customer and saying, hey, we've been notified that you were hit. Are you okay? That is that social good that we speak about. Now, with that being said, your technology is going to enable you to have that type of information in the next 5 to 10 years. But what do you do with that emotional aspect of when hand-holding, guiding that customer through the loss that they suffer? So at ActiveOps, what we're doing is we're enabling companies to automate their workforce management, workforce intelligence, and really figure out where do you have capacity and where do you have a need, and mesh the two together in a live environment so you're creating a better customer experience. So in this example, you can see that you have a capacity in this team of 2 human beings, but you need a robot. And then in this team, you have a need of a human being and a robot, and you have two robots available in the RPA team. So the idea is to take these robots and plug them in here, take this person and plug them in here, and really optimize that workforce to ensure you're receiving highest level of output. Now, a lot of times what we see with the technology enablement with companies is they're deploying a robot and they're saving about 60 to 80% of the cost. And the good thing about a robot is that the robots are not calling out, right? They don't get sick, nothing happens to robots, they're just functioning, as long as there's no break in the technical aspect of it. And nobody's really monitoring the activity of these robots. So we're looking at productivity and utilization. And when we see robots being deployed time after time, we see that the robots are only providing a portion of their time, so they're not being utilized. An example is our robot in one of our clients was utilized for 15 minutes, and the client's really happy that, hey, this robot predicted what I wanted it to do. However, you're unutilizing the 23 hours and 45 minutes that is additionally capable to you. So the idea is to ensure that with the AI work, with the machine learning, you're going to have massive amount of capacity. You know, some of the AI work, as I said, like you take a picture of a vehicle, computer vision, it can detect and provide to you what that vehicle replacement is going to be, and so on and so forth. In addition, you can take that same concept in AI where it's document evaluation. And the process that used to take 45 minutes to an hour to review a 20-30 report, 20 to 30 page report is now done in minutes. So 1 to 2, 3 minutes. And what are you going to do with that extra time that your specialists have? What are you going to do and how you're going to utilize them is a key component of where we're headed. Because you create this excess capacity and or lack of capacity because it did not automate the right process. So the decision making has to be in connection with the automation that's happening in our environment. And I will stop sharing and take any questions.
Yeah, thank you so much, Uwais. Quite an interesting presentation and very practical. In fact, I was just making a point. Uwais has shown where the future is going to. It's more of what we are now current, not what exactly we are doing it now, but what we should be doing in future. Like he said, if there's an accident, a robo or artificial intelligence should pick up the accident and ask how I can help you. This is the future. Fantastic. I have few questions here. Should we take a few questions before we go forward?
Absolutely. Yeah.
Fine. We have a question from Imran Yusuf. Can you briefly describe the digitalization factor that affects the business performance?
Yeah. So, sorry, you said a digital factor that's affecting the. I'm sorry. Can you repeat that?
Yeah. How digitalization will affect the business performance?
Okay. Yeah, I mean, digitalization is such a overused word. I think in the last couple of years, everything that we do ends up resulting into digitization, right? And what we find is on the back end, a lot of that digitization is actually translated into manual entry. So it's definitely going to transform our environments into becoming more agile, whether we are managing human beings and or not. You know, any type of digitization, any type of automation that's going to create any capacity for us, create any type of lack of effort on the human piece, now needs to be reinvested into other areas. So it is coming back to the idea of you need to create a talented workforce. And the way I say that is, if you look at 1999, 2000, when the computer crisis and the development happened, right? And the unique thing about that was people thought that the computers are going to eliminate so many jobs, and we know that's not true, right? And I think the same thing is true with the digitalization of our environment in the insurance industry specifically, is that it's going to create so many different opportunities where the human touch is needed, and to ensure that the companies and the employees are right skilled to be able to combat that.
Yeah, thank you, Uwais. There's a very interesting question coming from Naila. She wants to know what is the difference between AI and ML, artificial intelligence and machine learning.
Yeah, so AI, if you think about it from a high overview, it's looking at it from a behavior that you and I as human beings would have done. So, for example, if you would have taken an action of X, Y, and Z, settling a claim based off of a particular prediction that you would have made. This happened, that happened, and now I think this is the result of what I'm going to display to you, and I'm going to pay or deny that claim. When you think about machine learning, it's actually taking the same concept, so the same claim, everything is same, and the difference there, it becomes more so on learning from the patterns of what has happened and predicting what the future would hold for similar type of claims. So when you think about, I use vehicle damage all the time, but let's use a damage to a home in a particular area. AI is going to be able to enable you to identify where the damage is and what your decision should be, whether you should pay it, whether you should not. So you hear about Lemonade Insurance quite a bit, and they're using AI to predict their claims, and it's straight through. So as soon as the claim comes in, they pay their claims within 3 seconds, right? And the way they do that is they're profiling you. They're profiling everything that is about that particular claim and making a decision like a human being would do. But on the machine learning side, it's slightly different, that it's learning from behavior to behavior and saying, okay, this person had this loss, the other people that are likely to have this loss, and based off of the geography of them, it's a web on its own that's adapting and revolving. And for it to work, you know, a lot of people say that machine learning was a failure and or AI was a failure in a particular environment. And it's actually the data that's the failure, because you don't have clean data. You have data where you may be collecting certain portions of the details, but then for a certain period of time, you stopped collecting that data and it impacts your output. So if the data is consistent and it's clean and it's giving you the right information, you could predict how, for example, a water loss in a condo in Manhattan, you know, with AI, you could tell based off of a person's age, education, their past history of claims, all of that, whether that person is likely to have that claim or not, and predict based off of the damage that they're telling you, is it okay for you to pay? You know, and it's taking the risk assessment into it, similar to how a human being would, and saying, do I invest my time into this $3,000 loss when I know it's highly likely that it happened, it's on the 10th floor, and we have reports that it happened in other areas. So there's a social aspect of it, social media. You can integrate social media into AI as well. But the machine learning aspect of it is really taking that and saying, okay, now it's happened. How often does this happen everywhere else in Manhattan? And so on and so forth. And it's picking up those patterns. Manhattan is like Chicago. Chicago is like other city, right? And how do you translate that? What are the trends based off of the weather data and so on and so forth?
Excellent. Thank you so much, OS. I think we also learned from it. I think we always talk about AI all the time, but we don't know how to really elaborate it. Thank you so much. Before we go into the panel question answer, I have a few live examples to share. I hope everybody is able to see this. Can you see the presentation?
We see it.
Yeah. Thank you. Just to give a few live examples, which is happening in the UAE market. We have almost like around 11 to 13 insurtech portals currently working in the market, but three things have really interested me. One is Democrants. Democrants is very similar to the one which has happened as a revolution in Africa, and especially in the South Asian markets. Democrants is basically looking at micro insurance in a big way, and they have taken this as a very big challenge to do the entire operations through mobile payments. So they have tied up with Etisalat and Do in UAE, and what they are doing is they are selling smaller life and personal accident policies through their portals, and the payment will be done by the mobile payment. This is very unique to this market, where nobody has ventured currently in mobile payments. This also gives insurers to access new market segments where till now nobody ventured, especially because of the smaller premium. They also done the digitalization of the entire value chain of insurance sales and claim processing. So this is a very interesting field which is a sort of a live example in the market, and they have currently tied up with AXA and a few insurance companies in UAE to sell their micro insurance products. The second live example which I am taking is Bima. Bima is basically coming out of Enoch, which is a petroleum distribution company in UAE. Bima has brought in technology to make the client pay as per their usage. So this is pay per kilometer premium. So what they are doing is basically they are bringing in sort of a reward for clients who are using vehicles lesser and who are encouraging the green concept. And this also brings in the lesser number of vehicles on the road, thereby lesser accidents. They have gone in a big way to digitalize and automate motor insurance through their portal, and they are exclusively working with one insurance vendor. So thereby they are building up a volume for the insurer. Side by side, they're also introducing a sort of a reward program for the clients. The third startup which I would like to present is my own company, JDV International, and we have launched a portal, lastminutepolicy.com. This aggregation portal is with a difference. Unlike the other current digital platforms, we are a end-to-end customer experience portal where there is no manual interaction as such, and because this is a very unique feature, it's taking time for the people to understand and have a full experience of a digital purchase. Along with the digital experience, what we are doing is we are being the insurer's eyes and ears for the market. We do market analysis for personal line products, and we share this data with the insurance companies. Thereby, the insurers can also see how they can reprice their products. They can also see how the claims are building up or how good the accidents are being controlled. And also, they can see what sort of a product innovation they can do to market their own products well. We do both fleets and individual car insurance on our portal. Then we do travel and medical insurance. The good feature of our lastminutepolicy.com is that the portal has been designed in-house, and this gives us the capability to expand to any strength and any geography. Along with that, we also are one of the unique in the market for real-time dashboards and efficiency monitoring systems within the company. We are using robotic solutions to end all the repeat and routine jobs being done by employees. Rather, the machine itself can handle the task. So this was a small brief of the live update in the market. Let me go to the question answer session now. I have one question from Usman Noor. This is artificial intelligence is a high cost technology. How can developing countries benefit from it? Avesh, can you please take this question?
Yeah, it's perceived as a very high cost technology, but when you look at the benefit and the ROI it delivers, if being implemented in the right space, can definitely give you the benefit for it. So, for example, we see this. There's, as I showed you that slide, which has so many elements of AI. It's not appropriate for every company to go in and deploy every element of AI. There's going to be that waiting period that we are seeing that carriers are now doing less and less because of this hybrid work and remote work, because people are feeling the fear of the workforce not being available and or able to do some things. So when you take a look at that, it is a matter of prioritization and ensuring, are you attaining that 80-20 rule, right? If 80% of your work is being done by AI that's going to simplify it, then that may be the right approach. But if you're only applying it to 20% and expecting an 80% return, then you're not going to have a success into it. And a lot of AI technology actually is priced quite reasonable depending on the country that you live in. So a lot of organizations are now readjusting their approach. For example, an AI tool that's available to US is priced a lot different than somewhere in Pakistan, India, and other Brazil, other parts of the world, where the cost of human labor is much cheaper than what it is in the US. So don't let that limit you. I mean, don't scare it away. If there's technology that you're looking for, you find that there's a lot of competitors out now that are looking for use cases, because that's a good opportunity for them, especially in coming into developing countries and testing out their products and ensuring that it is delivering the output that they're displaying. So they're making the big money off of the bigger countries, but at the same time, they need that experience to be able to further enhance their tech and the tools.
Thank you, Avesh. I have one question for Alan. Infrastructure is of a particular country will be affecting the digitalization process. How are you planning to cope up with such situations? This is coming from Syed Tanveer Akhtar. Should I repeat it, Ellen?
No, I can see it here.
Okay.
That's a tough one because insurance is typically, and this is me speaking from a US perspective, it's a private market and it's based on shareholder profits. If you can't make a profit, why bother doing it, right? So if you're going to be investing in technology, you're going to be, as an insurer, you're going to ask yourself, can I make money on this? And as countries develop, I do think there's a lot of opportunities for insurers to make money and also do social good. Elon Musk is also helping the world, or he's attempting to help us all to get better connected to the internet. So I personally feel that's going to be a game changer, where we can use technology, share information, use the Internet of Things with these devices, sharing information, then be able to use AI, machine learning, and then going back to Noman's presentation, digitalize the world. So I think pretty soon, thanks to Elon Musk, it could be that a country that's not as developed or seems not as developed, it could be a little different than the US, especially if you think about regulations, where we're highly regulated here, but other countries might not be the same. I don't know if that answers or not, but it's a pretty good question and thought-provoking.
Yeah. One great thing about Ellen is she is from the developed market. So let me have support from Noman as well, who is from the new market. Hi, Noman, can you please add to your from your experience on this particular question, or should I repeat the question? Your speaker is off.
That's fine, Chirapati. I think, as Elaine mentioned, it is a tough question because it's something that is part of the enabling environment for all of us here. And I think from where I see it, from the insurtech world perspective, there are baby steps that you need to take in the developing world at least. Okay, I'm not going to talk about the developed world. And I think those baby steps or those hybrid approaches, whatever you call them, are required to start the engagement process. So, for example, if smartphone penetration in a certain segment because of that infrastructure being missing is not there, it doesn't stop the insurance industry to really reach out and use other tools, albeit technology tools that actually, let you reach out. And that's what some of the companies here in Pakistan have done. They've used call centers, okay? And they've used, SMSs for that matter, for the feature phones. So not having the right infrastructure, is a challenge, but you always have a way out of that. And I think those are those baby steps or hybrid approaches that one must take, to carry this, task forward. I hope I've answered that.
Yeah, it's quite a tough one, and I think it needs a lot of elaboration, of course. Noman, I think there is quite a descriptive question for you from Zahid.
Yeah.
Would you like to take it? Yeah, please. Should I repeat the question for?
I think there's.
Yeah, let me.
Yeah, if you could just. Yeah, please. Yeah, please see that. Yeah.
Yeah. This is coming from Zahid Mehboob. The question is, how do you see into the prospects of pulling the demand from customers' side so that the insurers should start investing into digital solutions? For an example, extended warranty for electronic goods. I mean, when there is no real demand in the market, how can the startups bridge up the gap between the potential demand for insurers to respond by starting delivery through digital presence? Thanks, Zahid. It's quite an interesting question. In fact, how do you build a capacity for something where there is no demand?
Okay, so Zahid, to answer your question, there are many aspects to it, and I think I'll start off with the very first one, and that's to do with pulling the demand from the customers. Okay. Now, when you talk about those customers, I think most of the developing world's customers, if you're talking about the end customers, they should be doing that rather than the other way around. If that's the Generation Z and the millennials or the other, the younger generation that we're talking about, they should be knocking on the door and they should be driving all of this. And in fact, they are driving this for many of the industries out there. It's just that insurance still hasn't really reached out and told them that we are also here. So unfortunately, that's one of the things. Okay. So if you're talking about, an insurance company to be a customer from an insurtech space, from that perspective, look, when you enter the insurtech space, you have to understand this is not picking a note for anyone, but I think it's important to understand the insurance industry and to understand the business. If you don't understand the business and you enter the business, there is little value that you're going to add. Okay, you may be able to generate stuff or do stuff, but unless and until you are on a fast learning curve to understand any business for that matter, I'm not talking only about insurance, you will have a challenge to really add value. And this, what you asked right now, you're talking about extended warranty, this is adding value. And if you're going to tell me that there is no market out there, well, I'll give you statistics here. Okay, I've got 2021 revenue for electronic segment in the consumer market for Pakistan, over $570 million. Okay, and this is projected to reach to $700 million in 2025. It may be minuscule from a lot of other domains out there. Nevertheless, it's a huge opportunity out there. Have we actually ever looked at it? No, we haven't. Why? It's not because the insurance industry doesn't understand this product. It's just that we haven't had an opportunity to have that dialogue. So building the knowledge, sharing the knowledge, educating your clients is very important. If you don't educate those clients or you don't build a collaborative effort with those clients, they will never come to you. Okay. If you're going to tell me about, there is no demand. Was there any demand for Uber and Cream, a few years back? No, there wasn't. The demand was created, and today it's a huge industry. So if you ask me whether warranty doesn't have a demand, look outside Pakistan or a similar territory. Tons of demand. Okay, it's just the way you approach them. Okay, and that's one of the things that from a startup perspective, from where I look at it, I need to create that product knowledge opportunity. I need to create the process knowledge opportunity. I need to create the tech tools for them, and I need to create them. I need to tell them that this opportunity is going to make them X, Y, Z through ABC distributions. And I need to sit with them, and I can only do that if I understand the product. If I don't understand the industry or the product, any industry for that matter, I'm not going to be able to add that. So the digital presence will be secondary. First, you need to understand the product first. So once you understand the product, digital will follow. Okay, so this is what what my take is on that.
Excellent. In fact, I was just thinking about it. Like you have the set of the bigs like Amazon and Google, but I think there are also boutique tech companies which are equally doing well. So like we said, you don't have to be global. Even you can serve from the local market. Thank you so much, Numan. I have two questions which are a little bit interrelated, and this is from Vamshi Krishna and Wakaruddin Rauf. Aves, this is for you. Should I shoot the questions?
Yeah, no, I see it. Thank you.
Just for the audience.
Yeah, go ahead. Yeah.
Yeah. From Vamshi Krishna Dumpala Sai, my question is, as you know, Lemonade is into home insurance and pet insurance. Please let us know if any conventional Raj insurance companies across the globe have been able to successfully implement these AI and ML techniques in underwriting and claims processing. Another question is, what are the challenges insurers in developing countries will face in implementing these techniques where the data collection in terms of IoT may not be as easy as those of developed countries? The other one is, from Wakaruddin. It says, does artificial intelligence may also assist the industry in analyzing the moral hazard? So
Yeah,
yeah, please.
Yeah, no, thank you, Telepathy. And so I'll address them one at a time. I think they're all kind of connected in some way, shape, or fashion. So first question, are other large companies deploying AI and machine learning? And the answer is yes. So legacy companies are seeing this as an opportunity where they're doing a lot of work, specifically very much behind doors. They're releasing some information. I know every single large carrier from Zurich, Chubb, to specifically USAA, who has come out and said that 60 to 70% of their claims in the next 5 years are going to be automated. So that is a huge commitment from them, where their senior leaders have multiple times have committed to that. So what does that mean? That means that do you need 60 to 70% less workforce, right? And that's not the case. It's just that the intelligence of that workforce is going to be slightly different. So there's definitely work happening there. The other question, which was asked about the developing countries, I would argue the other way around. I think the developing countries have way more data than anybody else, because there's lack of privacy, there's lack of ability to control what people can gain access to. So there's actually more opportunity for you to know. I mean, one of the companies that I've interacted with does AI evaluation, machine learning on the back end of social media. So if somebody broke their leg, and next thing you see is they posted somewhere, someplace that they are running a 5K next month, that's going to set some alarms off for you, right? So having that type of deep knowledge of this information that's coming from a million different directions that a human brain cannot comprehend, the computer can comprehend and predict to you what it thinks is should be the outcome based off of historical data. So from a developing country standpoint, I think there's a larger opportunity that that is there to be displayed. And lastly, the question that I believe Mr. Wakaruddin asked about analyzing a moral hazard, right? So the moral hazard aspect of it is with the IoTs, it gives you a lot more visibility and real-time access to what's happening, right? If you're deploying IoT devices into a manufacturing plant and you all of a sudden see that their levels of utility usage has gone up significantly, right? It gives you alerts on that. You can place those thresholds in making a requirement for it to be deployed in your space. So all those things that are causing intentional risk from the clients can now be actually eliminated and or reduced by having that live visibility. The biggest thing that we lack in insurance is we don't know what's happening. The client's telling us that, oh, they're going to drive 10,000 miles per year. And next thing you see is they're driving 50,000 miles per year. So that risk allocation is not appropriate, right? And or they're telling you they're only manufacturing t-shirts, but you come to find out that they're actually doing leather work. So all of these things in essence come to flourish. So for you to evaluate risk more appropriately. So it's going to develop, it's not there yet, but as it gets there, I think we're going to be in much better shape in the next 5-10 years.
Thank you, Avis. In fact, we are trying to be as practical and as connected to the reality for all our participants. I have one question for you, Ellen. This is coming from Mahmoud Mustafa. It says, what reference to insurance broking services? With reference to insurance broking services, how can we apply, utilize, and profit from digitalization? And what are the limitations we should avoid? Ellen, please.
So reference insurance brokering. So basically, how can insurance brokers apply, utilize, and profit from digitalization? What limitations should we avoid? I would say this come back to, part of it would be in which territory and which country. But how can insurance brokers apply, utilize, and profit from technology? If you've got the cash as an insurance broker, you can afford to invest, not even invest, but just engage with a vendor who can digitalize your operation. Say, for example, even record keeping or accepting applications. We've talked about bots on this session here. I am not a fan of bots, but if you think that bots is going to help you, for example, and I'm just using that as one example, well, then go ahead. But I know that insurance brokers also depend on commission, and that can be difficult when you have limited cash to go and investing in technology. So sometimes you're actually dependent upon insurers. So I think as we continue as an industry and as the world continue to adopt technology more, we're going to see insurance brokers are going to have to change. And Noman also mentioned something about knowing your product. At the end of the day, insurance is still a contract. And that's my personal belief. It still is a contract. You still need to know what you're selling. People buy from people who they like. And maybe with insurance, we might be, with the digitalization, maybe people we might not need people anymore. Who knows? We're going to see what this all means. So I don't know if I have an exact answer, but I would say stay curious, stay open, and learn as much as you can. And if you have the money, invest in something to make your operation as a broker more efficient.
Thank you. Thank you, Helen. In fact,
can I sort of
sure, please.
Can I sort of add a little thing here? I think it's important. One of the things that Elaine just mentioned, just to add on to what she said, investment is extremely important. And since we are engaged with the broking community, especially on the digitization perspective, I thought I'll just add a little bit. Unless and until you have the you take the initiative to invest in that, you're not going to be seeing the benefits out of it. So absolutely spot on that this is what is the first hurdle before you get to that conversation of digitalization. Secondly, if you want to talk about the opportunity window is so immense for this particular market segment. It's mind-boggling. Okay. And once again, it's not rocket science. The rest of the world is already doing it. And since we're talking about this part of the world, it's important that when it comes to process enhancements, when it comes to customer engagement, when it comes to insurer interactions, okay, all of this is being done on a manual basis. So many inefficiencies there, so many opportunities to add value. Unless you take that leap of faith to invest, as Elaine mentioned, you're not going to see the value coming out of it. We are seeing things moving, but the same thing, I'll come back to it. You have to take the leap of faith to do it.
Yeah, thank you so much, Naman. In fact, I have a very interesting question which is coming from Monish Ahuja. This is a little bit outside the market thought. What are your thoughts on use of cryptocurrency on premium payments? Because now we are online and there is so much of opportunity in this field as well. And there's a connecting question. Is there any interest in cryptocurrency insurance protection for online thefts on crypto markets and crypto networks? Noman, if you can shed a little bit of light, and Ellen, because you are in US, maybe you can add to this later.
All right. So obviously, I'm also learning on the cryptocurrencies, to be honest. So honestly speaking, this is something that we still have to, still have to see how it kind of sits. But whatever I've seen, it's a volatile, tool that sits out there in terms of premium payments. And I still haven't come across, case studies that say otherwise. But I think, like blockchain, unless and until you have those opportunity windows tested out, you probably wouldn't know what the benefit it holds. And eventually, we are already seeing digital wallets, digital money, digital all of this, yeah. But whether that is going to sort of change the face, from a cryptocurrency perspective, I still have to see that. So I'll just request Elaine to add to that because I'm a bit lost on that.
Okay.
I think we all are, to be honest, other than the folks pushing cryptocurrency. I liken it to, imagine living in the US but getting British pounds to spend. How is that going to help me? Right? Imagine I don't have any, I get paid, I have a claim and I get cryptocurrency as a claim payment. How am I going to spend that? Who's accepting it? Right? So unless it's accepted and you can spend it, I don't know how companies can pay with it. And the other thing is that you always have to protect, you always want to know, at least for me personally, who's protecting the consumers, right? Who's protecting the consumers? There are a lot of greedy people out there, and they're going to utilize cryptocurrency to their effect, and they might leave the consumers and the people who cannot speak up for themselves behind. So there could be a lot of dishonest acts going on, or maybe not now, in the future. That's just me personally speaking.
In fact, UAE has been in the forefront of digitalization and smart cities. Especially Dubai has invested a lot on smart city concept, and the government has already introduced payments for certain government services through cryptocurrency. I think a few insurance companies are now trying to see, because of the volatility of this currency, that is the biggest challenge here, because the currency is fluctuating very heavily. That is only one reason which insurance companies are seeing as a deterrent to this. But I think the prices will stabilize after some time, and this will become a very good tool for payments. I hope Monish, because this is a very new payment model, we have to still see how it evolves. Ellen, I have one question for you. Can Ellen share her inputs as well on IoT challenges for developing countries in terms of insurance sector?
So the thing about the IoT devices is that you need the internet. For developing countries, sometimes that's not reliable. And even here in the US, there's some rural areas that the internet is just not reliable. And I'm going to go back to my Starlink Elon Musk example. I think as Starlink enables internet access around the globe, it's going to be easier for these devices to connect to the internet, and the manufacturers to collect information, and the devices to talk to each other for sharing of information, even Amazon on their sidewalk to collect and share information. So it's going to get easier as the internet becomes more accessible. It's just a matter of time. Then there's also, I always mentioned regulation. I think that the opportunity in developing countries or countries that are in development actually will be more, because there's less regulation. So, there's less protection for consumers. It's less litigious. So you don't have those issues that we might have in countries such as the US, like rebating and discrimination. So I think the opportunities will be more as soon as the internet is there.
Yeah, thank you, Ellen. Because I think we are running short of time, I will take one last question. Noman, please, can you take this question? And as we are all slowly emerging from pandemic haze, do you think digitalization transformation is irrelevant if the overall service experience is poor? Does digitalization transformation project needs to measure both? This is coming from Anas Mirza.
Okay, okay, so this, let me just have a look. Is this a question on your, okay, fine, I can see it. Okay.
Should I repeat?
Digital transformation's relevance post-pandemic, I think it was never as high as it has been post-pandemic. And it's not because, the industry probably was looking into getting into it. It's probably because the environment around us pushed us into doing it. And I think that's given us the boost, to move forward. I always give an example of the banking industry 20 years back and the insurance industry today. Okay. And that's probably, 15 to 20 years gap between what the technology, whatever level they have reached out in this part of the world, is a difference between us. And I think, at least one thing that has happened is that we have actually closed that gap of, say, 20 years to probably now 12, 13 years because of the COVID. The second question is, whether the digital transformation project, is relevant to, measure your overall service experience. So, in that perspective, I think digital transformation, unless and until you look at the value chain of the insurance, experience delivery, you will not really have this, question being addressed. As of now, majority of the solutions that the insurance industry normally goes through are mostly distribution and sales driven. So there has to be a kind of a joint effort between a collaborator and the industry to look at the value chain. And the moment you look at the value chain, you will see what level of service, advantages and values that you can add, in there from digital transformation. So it's a concerted effort, requires the insurer to look at the value chain with the collaborator or themselves for that matter. That's where you'll find the opportunity.
Thank you so much. In fact, I was just about to close, and I think if you see, participants are not allowing you to leave. I have one question coming from Zahid Mahmood. Can you call the tools of digitalization a new world order? Because there seems to be quite a leverage from digitalization when it comes to compliance with KYC and what is this TF stuff? I don't know what is it. And then because you are more compliant by the country, can you
sorry. Terror financing. TF mean terror financing and know your customer. KYC.
Okay. Yeah. Noman, both of you can add a few thoughts on this.
Elaine, you go ahead first, please.
So I compliance with KYC. What is KYC?
Know your client.
Know your customer.
Know your customer.
Oh,
know your customer.
Okay, compliance with know your customer and TFs. I'm learning here too. What is TFs?
Terror financing.
What financing?
Terror financing.
Tariff?
Yes.
Oh, terrorism.
Terror.
Yeah, terrorism. Yeah.
Oh, terrorism financing stuff. Okay.
These are
very local. Yeah.
Rules or laws against anti-terror financing, anti-money laundering type of
I think
thing.
Numan, you have worked on these both areas while you were developing some tools at IJI. Yeah.
Okay, so Elaine, can I, with your permission, start? Yeah, because I asked you to start. Okay, all right. So okay, so from what I've seen in this part of the world, I would say digitization is the only world order that will save and that will move forward, and that's probably because of my passion, probably because this is what I love to do, but also to look at the practical side. This is where I see the world going. It's not just us here in this part of the world on the developing side. This is where there has been, documented, benefits out of it. To come to KYC, to come to the, TF, this can only be beneficial if you are able to apply or you're able to activate those tools digitally, hand in hand with the regulator or with the, with the government bodies. Wherever the government bodies and the regulators have worked hand in hand, they have become a very strong tool. GCC is a great example. You just go into markets like Oman. All this KYC relevant stuff is all digitized on APIs. Okay, this is the kind of stuff that will make things go forward quicker. We are still far behind, but we're making the right moves in the right direction. So far, if you look at Pakistan, we're not there. But can we get there? Yes, we can, with the right support of the regulatory bodies and the enabling government bodies.
Yeah, thank you, Noman.
Okay, so okay, with that now, I could say what, so know your customer. When I think of compliance, I'm thinking of compliance to coming from the perspective of protecting the consumer. That's what the end goal is. is to protect the insurance buying public. So here in the US, when we think of compliance, it comes down to treating your customer fairly, avoiding discrimination, making sure everyone, you're being fair and consistent. I am not familiar enough. I did international underwriting for a number of years, but I'm not familiar with the compliance as it regards to any one particular country and knowing your customer. But I would say that would be something the regulators and the legal attorneys would have to consider and ask yourself, well, why you have rules around knowing your customer? What is the end goal with that? And in terms of money laundering, digitalization is already using that to actually prevent money laundering or ensure reduces it. But with any, we talked about cryptocurrency recently, I wonder how soon that's going to be laundered if it isn't already. So
no,
again,
in fact, it is very similar. In fact, it connects money laundering to KYC. The whole idea of KYC is money laundering. And it's very similar to the terror funding thing. So thank you so much. In fact, we really ran out of our allotted time, and I really want to thank all the participants for being so patient, staying along with us all through the session, having interesting questions, and I hope our answers have been matching to their requirements and their expectations. And participants, this is not the last session which we are going to have. We will be definitely coming up with many more such webinars with your participation. Participants, also we request you to join IGIP. It's a excellent international forum where you have a excellent exposure towards technicalities of insurance, and there will be a lot of participation from your side as well, which will add to our knowledge. Before I close, I want to thank Ozone Digital and CXO Forum for supporting us and sponsoring this event. And a special thanks to Zohaib Kirmani, Usman Khalil, Mohammad Khurshid. I think without you, we are just on the periphery, like we are doing all the talking, but the action is from you three guys. You guys have been tremendous, and we thank you so much from our heart. And thank you participants again, and panelists, you guys are great. Thank you for participating and making this event very, very interesting. Hisham, you want to add before we close?
Yes, thank you very much, Chalapati, and all the panelists. I think it was a great session, a great learning experience for all of us. I think there were many new areas which were discussed in today's webinar. And that's the whole point, that IGIP is such a diverse forum that we got to hear from people across the globe, and things which were relevant, things which were relevant to the developed world, and things which are coming up in developing world. So I think it was a great learning experience for all of us who attended this webinar today. And from the Forum of Insurance Association of Pakistan and LII, I want to assure IGIP of our full cooperation. And hopefully these webinars will continue, and we have few exciting webinars already lined up by Zulfikar, Ellen, and their team. So hopefully you are soon going to hear from us. So all of you who are celebrating Eid from IAP and IGIP and LII, we wish you a very happy Eid. And we wish you all the best for the holidays. And thank you, everyone.
Thank you, Noman. Thank you, Elaine. Thank you, Aves. And Usman, I think you can now take the session to the closure.
Okay, thank you.
Thank you, everybody.
Thank you.
Thank you, participants. Thank you,
Thank
Zulfikar.
you. Thank you. Take care.